Today we're going to pull the curtain back on one of the most powerful asset building and tax reduction strategies available. It's a strategy that allows you access to the value of your hard-earned assets, fund your lifestyle, and build a legacy for your family, all while paying little or no income tax. It's called Buy, Borrow, Die. Well, it's not just for Jeff Bezos or Elon Musk anymore. It's a strategy that you, as a successful business owner, has access to. In this video, I'll break down the exact steps, real-world examples, and show you how to combine this with other powerful advanced tax reduction strategies to create a comprehensive wealth building and tax reduction system. If you're a 7 or 8 figure business owner, this is one video you don't want to miss. Hey, my name's Ed Lloyd with Ed Lloyd & Associates. I'm a CPA and certified tax strategist. For over 20 years, we've been helping our clients increase their wealth, reduce their income taxes, and help create a legacy. Let's get into this. As a successful business owner, you've mastered the art of generating revenue. You built a thriving enterprise, created jobs, and created something extremely valuable to your customers. But as your income has grown, so have your income taxes. You feel the pain of all that hard-earned work going away year after year. The traditional plan to wealth is simple. You earn money, you invest it, you watch it grow, and then you sell your investments. But when you sell your investments, the problem is there's taxes associated with that. That drags down your liquidity and it drags down your net worth. Let's say you've got a successful business and you build a stock portfolio to $5 million. And you want to take $1 million of that to buy a vacation home, put into another business, or some other venture that you're interested in. If you sell this, now you sell the $1 million of stock that you have $200,000 in. This is going to create a capital gain, 20% on the federal level, 3.8 net investment income tax, plus whatever your state taxes are. You're looking at about $250,000 of that million evaporating. This is a trap that many successful people fall into. They build incredible assets, but they can't access it without giving a big chunk of it away to income taxes. And it feels like you're being punished for your success. But what if there's a better way? A way that increases the value of your assets without reducing your liquidity, to use the wealth while you live and keeping your assets growing and your tax bill down to a minimum. This is where the buy, borrow, die strategy comes into play. It's a complete paradigm shift in how you think about your wealth. Let's break it down into how it exactly works. The foundation of the buy, borrow, die strategy is simple. You need to acquire assets that appreciate over time. For most successful business owners, this is already second nature. You're used to investing things like real estate, stock portfolios, your business, cash value life insurance, all things that provide opportunities to increase in value. And the key to the asset generation is to get assets that not only increase in value, but also have the potential to deliver income. This is critical for the next stage in the strategy. Here's the critical part that most people miss. The growth in these assets is tax deferred. You're not paying any money as they appreciate in value. This appreciation does not create a taxable event. This is what billionaires use to continue to have more and more billions on their assets without having to pay a dime of income taxes. So the first step, keep doing what you've been doing, acquiring and building assets that increase in value and have the potential to deliver income. But instead, think about these assets as something that's going to appreciate in value and that you're going to later sell. Think about these assets as something that you're going to hold on to and be able to retain as a permanent part of your wealth building machine. Next, I'll tap into the power of these assets so that you can use them without ever having to sell them. This is where the magic happens. You built up a substantial portfolio of appreciating assets. Now, how do you use that wealth without selling it and triggering a massive tax bill? The answer is simple. You borrow against it. Loan proceeds are not considered taxable income to the Internal Revenue Service. When you take out a loan, you're not selling anything. You're simply accessing liquidity, and you're not creating a taxable event. This is a secret the ultra wealthy have been using for decades to fund their lifestyles tax-free. Let's go back to our $5 million example. You need $1 million of liquidity, so you get a securities-based backed loan to pull the money out of the portfolio. That money is to do with as you wish. Invest in another property, use it for personal uses, whatever works for you. And because it's a loan, you pay zero income taxes on it. Your assets keep growing. The $5 million portfolio is still intact. You're still able to get the gains, dividends, whatever else is coming from that portfolio is still there working for you. You're just leveraging those assets. You haven't sold a single share. Now I know what you're thinking, but Ed, I gotta pay interest on that loan. And yes, you do. Currently it's about 5%. So your $1 million costs you about $50,000 a year. Let's look at what the depreciation is doing for you. If your rate's 5% and you're making 10, 15, or even more depending upon what your investment is, you're making money on using this leverage. So you still have your asset intact, continuing to grow, and using a fraction of what your appreciation is to pay the interest costs. Depending upon what your investment is, the interest could be tax deductible. If you're putting it into another investment, you may be able to write off that interest. So by borrowing, you've accessed the cash you need, your portfolio is still intact, and you saved yourself $250,000 of income taxes. This is the power of the borrow phase. Now let's talk about the final piece of the puzzle, the die phase. We're all gonna die. It's best to plan for it. And by planning for it and utilizing this strategy, we're able to help provide lasting legacy for you. So what happens to the loan you've taken out? And what about the assets you've accumulated? That's where a key provision of this strategy comes into play, stepped up basis. So when you die, these assets step up in value and basis. So your $1 million stock portfolio that went to $5 million from a tax basis is now $5 million. So what does that mean? When your heirs inherit this $5 million, there's no taxes to be paid on that money. They can take $1 million out of the $5 million that you had borrowed, pay that loan off, and there's still $4 million of assets available to be able to distribute to your heirs. You've been able to access that $1 million tax-free during your lifetime. It's continued to appreciate in value. When you die, the basis gets stepped up and there are no taxes to be paid on the appreciation. This is the ultimate estate planning tool. It allows you to pass on your wealth to the next generation in the most tax-efficient manner. Now that you understand the core buy, borrow, die strategy, let's dive into some more advanced strategies that can help accelerate your cash flow and accelerate the value of your assets. Let's look at 1031 exchanges. It lets you take real estate that's appreciated, take that gain and put it into another piece of real estate and not pay any income taxes. You can do this over the course of your life, and those gains are deferred until death. At death, you get the fair market value step up, no capital gains are paid on those. Cost segregation and depreciation. With real estate, we're able to take the real estate and break it down into different components that are able to be accelerated for depreciation. So what that means is you do a study, analyze the real estate, and based upon the analysis, you get a big tax deduction in 1 year. You're able to increase your cash flow. That asset's going to stay inside of your estate so it can continue to appreciate and cap up at the fair market value at your date of death. We've got a cost segregation tool down below if you want to get an idea of what your real estate would look like and how much you could possibly accelerate. Life insurance proceeds. With a life insurance policy, you're able to borrow against that tax-free. When you die, the death benefit is used to pay off the loan, and any remaining proceeds are paid out to your heirs, tax-free. Real estate professional status. If you're able to qualify as a real estate professional, you're able to take passive losses, write them off in the current year for real estate, further increasing your liquidity. Opportunity zones. They allow you to take capital gains, defer them, and if you hold them in opportunity zone for 10 years or more, eliminate the capital gains taxes on them. Charitable remainder trusts allow you to put appreciated assets in a charitable remainder trust, get a deduction in the current year, still pull out income, and pass on assets to your heirs. The key point here is there are lots of different ways to be able to reduce your income taxes. Increase your liquidity, increase your assets, and be able to further enhance the buy, borrow, die strategy. So here's a recap with the buy, borrow, die strategy. You buy assets that are going to increase in value. You borrow against them and don't pay any income taxes. When you die, you get the benefit of the step up to fair market value. Your heirs don't pay any income taxes, letting you be able to generate wealth during your lifetime and greatly minimize the amount of income taxes that you're having to pay. So as you can tell, this is not just a theoretical concept. It's a real tool that you can use to help increase your wealth, slash your income taxes, and increase your legacy. These and many other strategies are things we work with successful business owners and have been doing for over 20 years. If you're interested in learning more and seeing how much money you can save, please find a time at the link below and schedule a call. Please share this with another business owner that could benefit from this as well. Thank you so much for your time today. Make sure you check out our next video where we dive into the buy, borrow, die strategy utilizing crypto. Thanks so much. Have a great day.